Hello, ladies and gentlemen, Greg Mikulowski with the Forex. Quick look on, take a look at the dollar versus Swiss franc. Today's date is November 13, 2023. Let's take a look. I'm looking at the hourly chart of the dollar versus Swiss franc, and if you take a look at this chart, something sticks out in my mind, in my sight, I should say, to this chart. One is you see this low here on Thursday of last week. It dipped just below that blue line. That blue line represents the 100-hour moving average, but quickly rebounded. And the most important thing is the next bar right here found support buyers against that, and the price moved higher. Now let's look at Friday. And Friday, the market low came down, and where do we find support? Right against that blue line, and the market rebounded to the upside. And what do we see in trading here today? Well, the price low came right down to that blue line and found support buyers, and we've moved to the upside. So 1, 2, 3 different times the price tested the blue line and found support buyers against that level. So guess what? From that creates a pattern that traders are paying attention to. Why? Because risk can be defined and limited against the blue line. Now, in addition to the blue line on the Friday, the price also found support against this green line. This green overlay line represents, you see this D1 there, that represents the daily moving average, and it happens to be the 200-day moving average. Also near that level is this 50% retracement. This 50% retracement is of this move up from this low right here to this high right here. So it's a midpoint of that move. So we not only found support against the 100-hour moving average, we also found support against the 200-day moving average, and we also found support against the 50% retracement. And finally, you see this number right here, 0.89996. That's really close to 0.9000, a nice natural level that traders tend to focus on for option related purposes, or just because it's a natural support level. And so there's about 4 reasons why the price on Friday found support against that level and moved to the upside. And in trading here today, we couldn't get down to the 200. Why? Because the 100-hour moving average had started to move higher. So traders leaned against that and pushed the price to the upside. You get my point? Okay, that means that buyers are more in control, and it would take a move below the 100-hour moving average to increase the bearish bias. Agreed? Okay, and if we get below the 100-hour moving average, we'd also need to get below the 200-day moving average and the 50% retracement. So those are the types of things that in trading this week going forward, we would need to see happen in order for the sellers to take more control. Absent that, and guess what? The buyers are more in control. And so that sort of sets the framework for traders for this week, and for all of us out there. We also may want to pay attention to this broken 38.2% retracement at 0.9026. Why? Because it's closer. Okay, so it's closer support that was a ceiling earlier in the Asian session. We see had a high, we had a high, we had a high, we had a high against that level. We broke above it and it became a floor right here, and you can see that closely on that chart. Just watch, look at these highs and lows. So that is going to be our closer support in trading here today. As long as the price can remain above that level, the bias remains to the upside. So if you know what your risk is and you know what your support is, and you believe in that, and you're willing to risk that amount to break below the 26 level, perhaps, then you can think about topside targets might be. But really, the only question is how much you're going to lose, and if you don't lose that amount, you're going to make more on the trade. So that's what we're going to be looking for in trading here today. Probably watch the 0.9026 level as close support. As long as we hold support against that level, the bias remains to the upside. More conservative risk would be the 100-hour moving average, of course, which found support buyers on 1, 2, 3 different times. So there you have it. A look at the dollar versus Swiss. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.